Monster Beverage or Celsius? Which of these two stocks is the better buy for long-term investors today? That's the question I'm going to answer in this video, comparing these two beverage companies across a myriad of important financial metrics, including revenue growth, cash flow from operations to sales, and returns on invested capital. Then I'll look at the company's valuation differences. I'll share with you my proprietary calculations of the discounted cash flow valuations for Monster Beverage and Celsius. Finally, I'll look at their forward price to earnings ratios and come to the conclusion on which one I would rather buy today for long-term investing.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I wanted to start this comparison on revenue growth, and they've both done an excellent job increasing revenue in a segment that's very competitive and difficult to grow because it takes so much capital, so much inventory, so much heavy lifting in this category, right? You imagine one bottle of beverage or one can of beverage, and then you multiply that when you're buying a 12 pack or 24 pack. These are heavy things. And when you're dealing with heavy things, it's more difficult to grow. Celsius has increased its revenue from 100 million in 2019 all the way up to 1.3 billion in the most recent period, although sales have stagnated for Celsius since 2023. The company is hoping that its growth initiatives overseas and internationally will help facilitate and accelerate growth of its sales. Monster Beverage, meanwhile, has increased revenue from 4.2 billion up to 7.4 billion, and it too has experienced a decline in revenue from 2024 to the most recent trailing 12-month period. That being said, the compounded annual growth rate for Monster Beverage between 2019 and the most recent trailing 12-month period was 11.5%, compared with Celsius, which generated a compounded annual growth rate of 73%. And given that Celsius is still in its early stages of international expansion, I suspect that Celsius's revenue growth will continue to outperform Monster Beverage over the next 5-year period as well. The next metric I wanted to compare these two on is the returns on investor capital. And this is even more important for companies like Monster and Celsius, which have businesses that require large amounts of capital, as I mentioned earlier. Celsius ROIC soared all the way up to 39% in 2023 before coming back down to 17.4%. The company recently made an acquisition of a manufacturing business, which will help the company grow the business, but it'll also make the company more difficult to manage because now they have to deal with the manufacturing of a larger amount of its beverages, where before they were not dealing with all of the manufacturing. So that could be a positive or negative depending on how Celsius manages the situation, but definitely it increased the capital requirements in the company, which is one of the reasons why the return on investor capital is declining, of course, also as a result of the declining sales and declining profits. Monster Beverage, meanwhile, has been relatively steady over the last 3 years in its ROIC, from 28.2% as the bottom in 2022 up to 29.7% in the most recent trailing 12-month period, which are excellent margins for Monster Beverage. And I wouldn't be surprised if the company continues expanding this a little over 30%, but I don't believe it can go much higher than the mid 30%, even at full scale. By the way, I'm getting all of these charts from finchat.io. They were kind enough to offer a 15% discount to folks using my link in the description. The operating cash flow to sales ratio is the next metric I'm going to compare these companies on. And Monster, again, outperforming Celsius in this metric at 27.2% compared to Celsius at 17.4%. But I'll say that Celsius has made tremendous improvements since 2016. And given its early stage of international expansion, I wouldn't be surprised if Celsius closes this gap to Monster over the next 5 years. The 17.4% for Celsius at this early stage, I think, is almost as impressive as Monster's 27% at a larger scale. So now that we looked at the important financial metrics, let's look at valuation. Celsius is trading at a more expensive valuation, a forward price to earnings of 43, compared with Monster at a forward price to earnings of 33. Now, that's about a 33% premium compared to Monster when measuring by the forward price to earnings ratio. But I also like to measure companies using my proprietary discounted cash flow valuation model, which takes the present value of all of the future free cash flow I expect these businesses will generate. The output of this calculation has Monster Beverage at an intrinsic value of $45 a share, where the current market price is $64 a share. So according to this metric, Monster Beverage looks overvalued using my DCF calculation. I did a similar calculation for Celsius, and the intrinsic value per share I calculated for Celsius was $38.42 compared to the current market price of $39.18. For this calculation, I would say that the business is fairly valued because even though the current market price is above the intrinsic value per share by roughly 80 cents, that's not a large enough margin for me to make a conclusion one way or another. And so I like to apply a margin of safety in these calculations, and including the margin of safety, I would say Celsius stock is fairly valued and not overvalued. So all things being considered, which one of these two beverage companies would I rather own at the current market prices? I would say Celsius would be my preferred choice in this comparison head to head between Monster Beverage and Celsius. I like the growth prospects of Celsius given its early stage development. I like the business model better, the type of beverages that Celsius sells. I like that better than the energy drinks that Monster is selling. And then the valuation looks more favorable for Celsius compared to Monster using my DCF calculation. And then using the forward price to earnings, it's similarly valued with a 33% premium, but I think it deserves that premium given its super premium revenue growth it's generated over recent years and the expectations of better revenue growth coming from Celsius compared to Monster over the next 5 and 10-year periods. So for all those reasons, I would rather own Celsius if I had to pick between these two these two growth stocks to buy today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.